Welcome back to our channel. The practitioners and the parties related to international trade using letter of credit should know the scope of ICC rules regarding letter of credit. The primary and focused rules by ICC for letter of credit is Uniform Customs and Practice for Documentary Credits, shortly called UCPDC or UCP. Today, we're diving deep into the world of international trade finance, a topic that might sound complex but is absolutely essential for global business. We are going to break down one of the foundational rules that make it all work, Article 1 of the Uniform Customs and Practice for Documentary Credits, better known as the UCP 600. So what exactly is the UCP 600? Think of it as the official rule book for letters of credit used in over 175 countries. These rules are published by the International Chamber of Commerce, or ICC, and they create a standardized, predictable framework for banks and businesses all over the world. This means that no matter if you're an exporter in Vietnam or an importer in Brazil, everyone is playing by the same set of rules, which dramatically reduces misunderstandings and disputes. Now let's get to the heart of today's topic, Article 1. This article is super short, but it's incredibly powerful. It simply states, the Uniform Customs and Practice for Documentary Credits, 2007 revision, ICC publication number 600 UCPR rules that apply to any documentary credit when the text of the credit expressly indicates that it is subject to these rules. Let's unpack that. The Uniform Custom and Practice for Documentary Credit is 2007 revision UCPR rules that apply to any documentary credit, including, to the extent to which they may be applicable, any standby letter of credit when the text of the credit expressly indicates that it is subject to these rules. They are binding on all parties thereto expressly modified or excluded by the credit. The first key phrase is rules that apply. This establishes the UCP 600 not as law, but as a set of contractual rules. This is a critical distinction. Governments don't enforce UCP 600 directly. Instead, it becomes legally binding. Because the parties involved in the letter of credit transaction choose to make it so, they voluntarily agree to follow these rules. How do they do that? That brings us to the second key phrase, when the text of the credit expressly indicates that it is subject to these rules. This is the magic trigger for the UCP 600 to apply to a specific letter of credit. The LC document itself must explicitly say so. You'll typically see a phrase like, this credit is subject to UCP 600, or something very similar. If that sentence is missing, then the UCP 600 does not automatically apply. It's an opt-in system. This gives parties flexibility. While it's the global standard, in very rare and specific circumstances, parties could theoretically opt for an older version, like UCP 500, or even create their own set of rules, though that's highly discouraged because it defeats the purpose of standardization. So what does this mean in practice for you, whether you're an importer, exporter, or a banker? For an exporter, seeing that UCP 600 clause is a sign of security. It means you know exactly what documents you need to present, what the deadlines are, and how the bank will check your documents. It provides a clear roadmap to getting paid. You know the bank will follow a globally recognized process. For an importer, it provides the same level of certainty. You know that the bank will only release payment to the exporter after they have presented documents that comply with the terms you specified in the letter of credit, all interpreted according to the UCP 600 framework. This protects you from receiving goods that you did not order or from paying for a shipment that has not even been sent. And for banks, the UCP 600 is their operational Bible. It gives them a clear, step-by-step guide for examining documents and making decisions. It shields them from disputes between the buyer and seller. UCP 600 Article 1 expressed that it is also applicable to the standby letter of credit when it refers, so scope of UCP 600 is obvious. Remember, a core principle of letters of credit, which we'll cover in other videos, is that banks deal in documents, not in goods. The UCP 600 reinforces this by giving banks the precise rules for handling those documents. So, to summarize Article 1, it's the gateway to the entire UCP 600 framework. It establishes the UCP as a set of voluntary contractual rules, and it makes it crystal clear that these rules only come into play when they are explicitly incorporated into the letter of credit. It's the on-switch for a system that provides certainty, security, and efficiency in trillions of dollars of global trade every single year. It might seem like a small piece of administrative text, but Article 1 is the cornerstone that holds the entire structure of documentary credits together. Without this simple but crucial article, the consistency and reliability that the world of international trade depends on would simply not exist. It's the starting point for trust in global commerce. That's our deep dive into UCP 600 Article 1. I hope this breakdown made it clear and easy to understand. International trade finance can seem intimidating, but when you break it down rule by rule, it all starts to make sense. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe to our channel and hit that notification bell so you would not miss our next videos where we'll explore other articles of the UCP 600. Have questions? Drop them in the comments below. We love hearing from you. Thanks for watching, and we'll see you in the next one related to banking and finance.